Last Thursday night, during the taping of CB3 Live, Israel bombed Iran and changed the geopolitical dynamic in the Middle East. What does that mean for your portfolios? What happened last Friday? And yet today we're up really strong in the market. Your CB3 Financial Weekly Update begins now. Let's dive into what happened last week and what lies ahead this week. So we started off with considerable optimism last week with the S&P breaching the psychologically important 6,000 level for the first time since February 21st. You'll remember that the lifetime high of 6144 was set on February 19th. So that's riding a positive wave of momentum until Thursday night when the bombing started. And that changed everything because it is indeed a sobering reminder of how quickly sentiment can change. The technology sector, which had been leading the recovery with the NASDAQ trading at its highest level since February, experienced notable weakness with NVIDIA and other stocks just dropping like rocks. And the catalyst for this, of course, is the military tension between Israel and Iran. Now, Israel has launched multiple large-scale attacks since that Thursday night and continuing now until today. And what makes this particularly concerning for the markets is the scale and the targets of the operation, because they're going after nuclear targets in an attempt to wipe out any possibility of Iran developing a nuclear weapon. So Israel launched this military operation, and it is going to continue, according to President Benjamin Netanyahu, until the Iranians have no more nuclear capacity. The bombing struck at the heart of everything that Iran has developed and killed many important people, including, I think, about a half a dozen scientists. So for portfolio managers, the key concern here isn't just the immediate market reaction, but the potential for sustained disruption. And we've already had sustained disruptions given to us by the tariff wars. And as you know, President Trump is up in Canada right now speaking with the G7, and they're doing everything they can to avoid having to face him. And each country wants to wait as long as possible to see if they can wait out his wrath, but that's not going to happen. And back to Iran and Israel now, if Iran does not drop their plans for a nuclear reactor and developing a nuclear bomb, it's going to get really, really bad, in my opinion. So the sector rotation was pronounced. Energy stocks surged, with Exxon adding 2%, while Lockheed Martin and RTX each jumped 3%. Travel stocks took a bit of a hit because Trump is planning on, or at least considering strongly, adding 36 countries to the no-fly list. That would affect tourism in a big way for Europe, the Middle East, and Asia. So beyond these geopolitical concerns, the economic fundamentals, especially the earnings that we're seeing here as the first quarter earnings complete, is that it's pretty strong in America right now. And I talked about this on my show Thursday night, interestingly enough, as the bombing was going on, and none of us knew it at the time. But both sets of inflation data, CPI and PPI, came in around 2.4%, PPI around 2.6%, but they came in where they were expected to come in. No surprises to the upside. This is a case where we don't want upside surprises. We want downside surprises when it comes to inflation, because lower inflation means the Federal Reserve has more of a tendency to drop interest rates. So the current Fed funds rate of 4.25 at 4.5, remember it's a range, remains above the inflation rate of 2.5 to 3.5%. And thus the Fed has room to lower rates, even 100 basis points. But so far, Fed Chairman Jay Powell has seen no inclination to do so. And of course, that has earned him significant wrath from the President of the United States. So what do I see ahead here? The week ahead brings several key events. Wednesday's Federal Reserve meeting will take the center stage as the Fed concludes its meeting and makes a decision whether to keep rates unchanged or to drop them a quarter. I think it's going to be unchanged. The best case situation is they drop 0.25%. So on the data front, we'll receive important insights into consumer resilience, and Tuesday brings retail sales and industrial production data. Both of those will be key to see which way the market will move. So far this week, the VIX has plummeted, i.e. risk has come out of the market. We're seeing the VIX now right around 19. It was 21.5 on the weekend, and that is a strong number to see come down in our favor. We want a low VIX, we want a high stock market, obviously. So it's worth noting that this is only a 4-day week. The federal holiday, Juneteenth, will be this Thursday. It's unusual to have a market holiday in the middle of the week. It usually only happens on 4th of July, Christmas, and New Year's Day. But this year, Juneteenth will be on a Thursday, so markets are open Monday, Tuesday, Wednesday, Friday this week. Corporate earnings remain light because until after the 4th of July, we won't see any significant second quarter earnings reported. So for portfolio management, the current environment suggests several considerations. The geopolitical premium in energy prices may persist, making energy exposure tactically attractive. We're looking at several different energy plays this week to see if we want to swap some things out in CG and GI. But most asset managers like myself think that the impact on the U.S. economy and the markets will be temporary with all of this geopolitical risk in the Middle East. So the market's looking for a limited upside, but also limited downside. I see range trading here until the next major trade deals are announced. And that's what we really want to see. So as we navigate this week, the key variables include what I mentioned earlier. Just to recap, the Fed's communication strategy about whether they're going to lower rates this week, or is their next possibility going to be in September? Next is the market's proximity to all-time highs, just less than 3% away from lifetime highs, even with everything going on. And folks, this is what says to me that the underpinning of the U.S. stock market is just very strong, with all of the negative news out of the Middle East, out of remaining angst with Ukraine and Russia, and certainly the angst with the G7 meeting in Canada, because it certainly doesn't look like that any of the foreign nations are going to get what they want. Trump is going to get what he wants, and that's where we start this week moving forward. Thanks for listening. We'll be back next week, June 23rd, for the next weekly update. Take care.